Hey guys, Pedram here from sellingin.com with a quick tutorial on buying and selling investment properties and capital gains tax. Seeing how it's a strong buyer's market in most of BC right now, I've been working with people to buy investment properties, and I'm often asked about the cost and tax implications of doing that. So let's take a look at the whole process, and we'll break it down into three parts: purchase, holding, and selling. As an example, we're going to use a property that we're buying for $400,000, and let's say our income for the year is $50,000. When you're buying investment property, the fees are the exact same as buying any other kind of property, except they're just accounted for differently. Now, starting with part one, the purchase. For tax purposes, our purchase price is the cost of the property plus the property transfer tax. In our scenario, that's going to be $406,000. All other expenses that we have get taken off of the personal income for the year. So we said we make $50,000, and let's say we'd spend $1,000 in buying the place, lawyer fees, inspection, whatever it might be. Now the income for the year goes to $49,000, and that's what we're going to pay tax on. For the holding part two, in our scenario, we have a mortgage payment of $1,500, and let's say we're renting it out for $1,700 a month. That means in a year, we're making $2,400 in revenue, and this is taxable income. Now, because the property is treated like a business, any expenses we have in maintaining the place are tax deductible. So let's say we hire someone for $1,000 to find a tenant. You got to buy new light bulbs, paint the place. All of these get taken off of your personal income for the year that you spend them in. With this in mind, every month that your property is vacant, that mortgage payment is a tax write-off too. Now, let's take a look at part three, selling the place. In our example, we bought it for $406,000, including transfer tax. And let's say we're going to sell it for $500,000. So our gross profit is $94,000. The government has been kind enough to only tax us on half of this instead of the whole $94,000. So we're taxed on the $47,000. This is the capital gains tax. So we take $47,000 minus any expenses we have in selling the place, lawyer fees, realtor fees, and now that gets added to your personal income for the year, and that's what we're going to pay tax on. An increase like this puts most people in a higher tax bracket for the year, and now it seems like you're paying your whole profit in taxes. There are ways to make this less painful. Matters get even more interesting when you purchase the property through a corporation or under an RSP umbrella. There's great benefits to both of these, and they vary tremendously from person to person. Now that should take care of the basics regarding buying and selling investment properties, and if you have any specific questions, don't be shy to ask. You can call me or email me at pedram@sellingin.com.